Hey traders, welcome back to the channel. It is Thursday, February 5th. Another wild day on Wall Street. I hope you guys stayed safe and had some winning trades. Don't forget, you can always go short. There's no such thing as only having one direction to go. And I know that most people really just look to go long and to buy, to look for the upside. And I will admit that most of the time I'm also looking for the upside more than I'm looking to go short. But in times like these, do not be afraid to jump onto those put contracts when you see action happening like what's happened in the last few days. You know, the old saying, don't try to catch a falling knife, is very much in play this week. So anyway, let's get into the news. The moment Alphabet revealed that it plans to spend up to $185 billion on AI infrastructure this year, which is essentially doubling last year's budget, Wall Street realized the game has fundamentally changed, and not necessarily in a good way. The S&P 500 plunged 1.2% to close at 6,798 today, officially turning negative for the year. The Nasdaq collapsed 1.6% to 22,541, and even the resilient Dow couldn't hold up. It dropped nearly 600 points to 48,909. So this wasn't just another down day. This was the market's emperor has no clothes moment for big tech's AI spending binge. So here's the paradox that's been tearing investors apart, basically. Alphabet beat earnings expectations across the board. Cloud revenue surged 48%, and they announced a $240 billion cloud backlog, proving insatiable demand. Yet the stock still fell because they're planning to spend double what analysts expected. So when good news becomes bad news because the costs are too terrifying, you know we've entered a new phase of this AI boom. Qualcomm twisted the knife, plunging 9.5% after warning about a global memory shortage that'll crater their next quarter. Not because demand is weak, but because the entire supply chain is so overheated that companies literally can't get the components they need to keep growing. So we've gone from worrying about whether anyone wants AI chips to panicking that the companies selling them can't make enough to meet demand without blowing up their margins. The labor market data Thursday morning read like a horror story for anyone hoping the economy stays resilient. Jobless claims jumped to 231,000, the highest in 2 months. But that number doesn't even capture the real terror. January layoffs announcements hit 108,435, which is the worst January since the depths of the 2009 financial crisis. UPS is cutting 30,000 jobs, Amazon is shedding 16,000, and even the Washington Post is gutting a third of its staff. This isn't just trimming around the edges, this is companies making fundamental bets that 2026 won't need as many workers. And while companies announced over 108,000 layoffs, they announced just 5,306 new hires, also the lowest since 2009. The quote-unquote low hire, low fire narrative just died. We've entered high fire, no hire territory, and the implications might be chilling. Bitcoin's collapsed below 64,000 by day's end, which is down 13% and losing nearly half its value since October, tells you everything about investor confidence right now. When Treasury Secretary Bessent explicitly stated the government has no authority to bail out crypto, the fantasy that institutional support would prop up digital assets evaporated. Over $1 billion in leveraged crypto positions liquidated in 24 hours as reality reasserted itself. Silver plummeted 16% as Chinese buyers dumped holdings, essentially erasing its entire two-day recovery. When even the safe haven metals can't hold gains, you know fear is turning into capitulation. The S&P 500 hasn't just dipped into negative territory for the year, it's hit a 7-week low. The Nasdaq's 3-day rout is the worst since April's tariff-induced meltdown. Amazon is reporting after the bell, and if their results don't somehow thread the needle between showing AI demand without terrifying investors about spending, tomorrow could make today look tame. So what's going to happen tomorrow? Nobody knows. I don't know, you don't know, but that's the whole point, and that's why we love trading. It's it's always exciting. It might not always go the way that you want it to go, but it's always exciting no matter what. So that's the daily wrap up for today. Have a good night, and keep your fingers crossed that tomorrow is not just as brutal as today was. So I'll see you back here tomorrow afternoon. Bye-bye, everybody.